Right now we're talking banking, and we've got one of our partners, Scott Hudson of Beacon Credit Union. Not real big differences as far as the clients are concerned between banks and credit unions. You guys offering a lot of the, or most of the, maybe all of the same services, and really providing the same function for them. And one of them, I guess I should say, is mortgages, and interest rates remain, historically speaking, very low. And people looking at refinancing or paying off mortgages, it's a service that you guys offer. You've got some good ideas for folks who are sitting there looking at their mortgage for not only paying them off, but different things that you might use them for to build up more equity in a home or really benefit. So let's talk a little bit more about these mortgages and different loans that you guys have, and what some tips are for folks.
Well, Rich, I think that it goes without saying that your mortgage may be the biggest debt that you'll most likely ever have in your life. It seems that one of the most common gripes we all share is that how can you get rid of your mortgage faster and pay less interest. Beacon Credit Union, we sort of have a few tips that we share with people when they first come in and start talking about mortgages and refinancing. When it comes to refinancing, we find that most people put it off because refinancing, they feel like there's a lot of paperwork involved, or they think that they may already have the best mortgage plan for them. We went through this unprecedented time frame of low mortgage and interest rates.
Right.
And so people, once they get that big hit or two on their interest rate, they go, well, I've got this really great rate and I'm just going to put it on autopilot. But at Beacon, we see so many people come in and talk about mortgage refinancing and never really realize just how some of the recent changes in lending programs, or even changes in their own financial picture, have opened up a big savings opportunity. That's really what we're talking about.
Give me an example. I mean, if it's not just about, hey, I've got this rate and rates right now, maybe relatively the same or a little bit higher or a little bit lower, is it worth the hassle? Give me a couple of examples of what's changed. You talked about some of the programs changing and some of the loans changing. What may make this worth someone's while other than just the rate?
What we see oftentimes with the government is that they try to encourage investment. They want the consumer to buy homes. They want them to refinance. They want to spur the economy. So there may be incentives. For example, how much percentage you're able to refinance may have changed. Your accessibility to different types of programs may have changed. Ways that we find people who have really great rates, but maybe as they have gotten older over the years, as you get older, your earning capability grows. So you're able to spend more on a mortgage, but maybe you're perfectly fine in your current house. Why not accelerate your payments? That's a great bit of advice that we say, rather than the traditional monthly payment, up the ante for an accelerated, let's say a biweekly or even a weekly payment.
Instead of making, say your mortgage is $1,000 a month, why does it help to make two payments of $500 every other week? Why does that help more than just the one monthly payment of $1,000?
You're essentially making an additional monthly payment each year after you add all these things up, which will obviously help you pay off your mortgage that much faster. We don't like to talk about houses as investments. In reality, that's going to be their primary residence.
Right.
So you really have to look at it more like a debt than an investment. It's good to think of it like making smart investments in your home to make sure that your home has the value that you want to maintain, but really trying to shorten that time frame, because if you're in the traditional home buying age bracket, you're in the age that your earning potential is starting to accelerate and improve. And by reinvesting that, you're buying sort of an insurance policy when your earning potential becomes maybe less so. Maybe you're looking at retirement coming up toward the latter part of owning your mortgage. So you've actually helped your retirement situation out. If you're looking at a 30-year mortgage and you end up shortening that thing by 5 years, just think of the advantage if you're in your 30s and you say, okay, I was going to be paying on this mortgage until I'm 65, but now you're paying it off at 60 or you're paying it off at 58. Well, that's an incredible shot to the arm of your retirement.
Scott Hudson, Vice President, Beacon Credit Union here. Scott, thank you.
Thanks, Rich.